giving EV users access to Tesla's charging stations. But how much value could it drive for Tesla? My next guest says not so much, maintaining an underperform rating on the EV giant. Joining me now, Toni Sacconaghi, Bernstein senior research analyst. Toni, you've got, I think a 150 price target on Tesla. It was close to there 2 months ago, but it's over 250 now. What makes you think it goes back down?
Good afternoon, John. Look, I think Tesla stock is very difficult to predict in the short term. Our perspective is that, upcoming numbers won't be great. I think there's limited chance that Tesla will eclipse consensus expectations in terms of deliveries this quarter. I think margins will be down sequentially because they took incremental price cuts in the quarter. And I think, most importantly, when we look forward, Tesla's continuing to try and grow at very aggressive rates, 30% plus this year, 30% plus next year. And it has no new product offerings. And so how do you create incremental demand when you don't have anything new per se? And that's Tesla's challenge over the next, 4 to 6 quarters before we have some new lower price models. So that's our concern, is that Tesla will either ultimately fall short on deliveries at some point over the next 4 to 6 quarters, or that we're going to see continued price cuts to be able to drive that growth.
How much does that matter, though, when there are all these headlines that kind of feel like the rest of the EV industry throwing in the towel and admitting that Tesla is king of the hill with this charging standard, and that Elon Musk was visionary in building out these stations? I mean, if you want to believe in Tesla, even if they have some near-term misses, it sort of seems like this charging narrative helps you.
Well, I think certainly it's an admission by competitors that Tesla has a really good network, and they want their cars to be able to use it. I think competitors have admitted that, Tesla has a cost advantage, that Tesla's been a pioneer in EVs. So, clearly there are many positives about Tesla. It's just fully reflected in its valuation. It has an $800 billion valuation, which is essentially the valuation of the entire auto industry, even though they'll make less than 2 million cars this year, and the auto industry outside of Tesla will make about 78 million cars. So I don't think this is a question of, Tesla's not known as a leader per se. I think it's really a question of what you want to pay. And to your point about the network, the charging standard for Tesla will become the standard in North America with all these OEMs signing up for it. But right now, Tesla has about 80% of the EV installed base in the US. So adding an extra 20% of cars that can use that network is not a big deal. And Tesla's supercharging revenues last year were about $600 million, which is less than 1%. And again, when we think about, how many more EVs are going to be able to charge on Tesla's network, right now it's pretty small. It's only about, 20% on top of the existing 80% of the EV fleet that Tesla has in North America.